Hello, I'm Roger Peterson. Welcome to Market Call. Kim Bolton is on the show. He is president and portfolio manager at Black Swan Dexteritas. He'll be taking your questions on technology stock. You can call us toll free 1-855-326-6266. You can also send us an email to marketcall@bnnbloomberg.ca. All right, Kim, thank you very much for joining us today.
Thanks, Roger.
You're joining us in the middle of one of the crazy, can we call it one of the craziest years? And it's all tech that's doing most of this, right?
Crazy this year. It's been crazy for the past 3 years.
and this year, one of the things we just want to chat about right now is what an impact, though, tech is having on the market run, though.
It's pretty amazing, isn't it? Like, since the middle of April, the triple Qs, sort of the benchmark of the NASDAQ, is up 40% in 6 months. Mm-hmm. It truly is historic.
And imagine if you'd taken away what happened prior to that for the start of the year, it would be up even higher. Should we be worried yet, though?
No, I don't think so. It's interesting. J.P. Morgan came out with a research study, and they claim that out of the S&P 500, there are 41, pure AI stocks that have contributed 70% of the returns this year for the S&P 500, and the other, 459 stocks have contributed the other 30%. So there's still a lot. Just Roger, just wait until the build out is done by the vendors, and then you have the end users who are going to be using all of this build out that they've been doing with in the whole AI infrastructure. I think there's a long runway.
And what about when you hear like today, XAI, $20 billion in funding, NVIDIA contributing $2 billion to that, but it's kind of essentially to cover their graphic processing units that they're going to sell to XAI. Yeah. Is that a bit of shell game, or?
It sort of feels like a shell game, but the rubber's going to hit the road come 2026 after all this spend for the last two and a half years. Whether the vendors are going to be making money, but I think more importantly, whether the end users that are going to be using this AI infrastructure are going to be making money. And so far, we believe yes, for both sides, both the infrastructure, there's still a heck of a lot more to be built out on the hardware, let alone the software side. And then the end users are the ones that are going to benefit. So,
and what are some of the things for the end users that you're seeing right now that are saying this is going to pay off long run?
Just look, it's definitely hitting the healthcare side. It's speeding up the research and development on the biotechnology side. It's definitely impacting the entertainment side. The entertainment business, just look at, one of the reasons Netflix is doing so well is because they've really embraced AI. But then, it's going to filter down even into the manufacturing side. We believe robotics are going to be a big deal in 2026. But robotics only works with the AI infrastructure out there. And so there's a lot more to come.
You think there's a real sea change ahead?
Absolutely. Yeah.
Okay. On that note, we're going to take a bit of a break, but we'll be back with Kim Bolton of Black Swan Dexteritas, taking your questions on technology stocks. We are back with Kim Bolton of Black Swan Dexteritas, and we're going to get right to your calls and emails. Email first on this one, and it is from Marge, and she says, could I get Kim's opinion on open text?
Yep. Thanks, Marge. I'll take it, Marge, that you own it. So I would hold on to it, but I'd look for places to actually buy, add to it at better levels. Just as we were talking about, open text is very much embraced the whole AI in a big way, and is expanding and supporting its business and also its clients' business. They went through a massive amount of expansion back in 2022. They bought Rocket Software for about $2.3 billion. And they've been able to maintain a double-digit recurring growth rate with an EBITDA margin expansion and so on. So it's going. The caveat that I'd have to this is, if you look at it on the charts, the price action isn't all that good. So that's why I'd sort of hold off. You can buy it. If you own it here, I'd recommend that you buy it, maybe add to it down around, I have it actually in US dollar terms, but if it's trading at around 38, Canadian version, I'd say at around 33. And then if you're lucky, as you see when it dips down there, just under 30, so around 29, you could add to it.
Okay. Yeah. All right, let's get, we've got quite a few people wanted to talk to you. Scott from Toronto, you're up next.
Yeah, thank you, Kim. I was lucky enough to own a little bit of AMD. I was surprised that it jumped so high. What do you think of AMD going forward? Is it something I should hold, wait for a pullback? What do you think?
We put when it comes to the silicon and the accelerators, we've really put our eggs in the basket of NVIDIA and also Broadcom. You sort of had to make a choice in the beginning, but I would it popped because of what happened the other day when OpenAI put another 10 million, and that's sort of the shell game, right? Because NVIDIA put 100 million into OpenAI, and then a couple of days later, they used 10 of the 100 actually to buy into advanced micro devices. But it was interesting that Jensen Huang, the CEO of NVIDIA, actually commented this morning on one of the networks that he was surprised that AMD sort of gave it away, because he very much believes that AMD has a long, long runway from here. So I would hold on to it, and I would add AMD into that fold of both Broadcom and NVIDIA.
Okay, and this will segue nicely into our next caller, Michelle from Vancouver.
Hi, Roger. Hi, Kim. If I'm looking to add a position in NVIDIA, is it a good idea to buy here now at these levels, or is there another price point you'd suggest? Do you still see a longer runway for the stock? Thank you.
So I'll take it that you actually probably own it and you'd like to buy some more. Here we are trading at the top. So to me, if that's sort of your strategy, I would even sell some calls. Don't get called away, but just earn some premium. But I'd also, if you're interested in buying some more, you could sell some puts. And if you sell some put and you end up getting delivery, then you've bought it lower than where you are right now. But I would definitely recommend everyone have NVIDIA, certainly within their top 10 holdings.
Not done yet, eh?
Yep.
Okay. Carl from Toronto, what's your call?
Yeah, good afternoon, gentlemen. Thanks for taking my call. Kim, about 3 months ago, you spoke about Kraken Robotics, And at the time, it was doing pretty well. You had it as a buy, and you also mentioned how its underwater technology is being taken in the field for the oil and gas industry. I think it's also being used for the defense industry, and it's perhaps for this reason that now the stock seems to have caught fire, both from stock price and in trading volume. So my question is, do you own Kraken? Have you added any more? If you do, and how do you see the stock going forward from here? Thank you very much. Have a great day.
Great question. Actually, I think I was on Hot Picks earlier this year and recommended Kraken for precisely what you were talking about. You know, they started out, they're a Newfoundland Labrador company.
Okay.
And they were really servicing sort of the underwater exploration side of the oil and gas, just off the shore of Labrador and Newfoundland. But then they came up with this great idea of actually their devices could actually be used for defense purposes, and that's exactly why it's popped. It will be interesting to see. I'm sure they're sort of all over Europe trying to talk to people about what they can do for them. So currently trading, but just shy of 640. We have a 12-month price target of 780. So there's still a little bit of a runway behind it.
Okay. Yeah. All right. On that note, we're going to head to a break. We'll be back, though, with Kim Bolton of Black Swan Dexteritas, taking your questions on technology stocks. Kim Bolton is with us here from Black Swan Dexteritas, and we're going to get right back to the phones. Kim and Ann from Scarborough, what's your question?
Kim, much to my chagrin, I sold Intel at 30. Now it's trading at 37. Should I get back into this ugly duckling that seems to be morphing into a swan? Thank you.
And you sound like me. You know, we actually had it in the fund for quite a while. I always said if we ever saw it above 25, 26, we'd sell it, and I did out of the fund. However, we have it in quite a few separately managed accounts, so it's worked out quite well. I don't know, everyone seems to be expressing an interest into Intel because, you know, when you think about it, you know, the foundries, the ones that actually make the chips, and it requires so much CapEx to actually build these foundries. That's why there aren't that many around. So, you know, the big one, of course, is Taiwan Semi, and then you got Samsung. You have Global Foundries, but Intel, it's a fantastic company, but it's all been a problem of the execution in the past. The new fellow that's in there has done a fabulous job. What is it, Lubin Tan? But he's both a businessman and an engineer, which is exactly what they needed. So, you know, the average analyst out there actually has a 39.50 12-month price target. So it's getting pretty darn close. And I would recommend, if you can see it down around sort of 33 and certainly under 30, I'd add to it.
Okay.
Yeah.
All right. We'll move on now and get a call from John in London. Hey, John.
Hi, Roger. Kim, thank you very much. Again, I followed your approach exactly 3 to 4 months ago. You mentioned robotics. I bought Kraken. You mentioned quantum computing. I bought Rigetti. And you mentioned the cloud space, and I bought this company, Nebius, Nebius. Kim, you're 3 for 3 with me again. Is Nebius an ad, or is it just a hold? Or thanks very much.
Thanks, Jack. So we're actually, every morning at 8:30, we have our research meetings, and we were just talking about Nebius this morning. So just to go back, Roger, Nebius used to be Yandex over in Russia, and they were sort of like the Google of Russia. And so a lot of Russians have yandex.ru as emails. But then when the whole Ukraine thing, they all got out of Dodge, and some of them moved to Israel, and then a handful of them moved to the Netherlands, and they set up Nebius, which is a data center type company. But they didn't have one of the benefits of it. They had the intellectual property, they had the money, but they didn't have any sort of legacy baggage. And so they built up a state-of-the-art data center group out of Europe, and they've more recently come here to North America. So currently trading.
I have it at 120 right now.
Yeah. We have, it doesn't have that much of a runway with the average analyst out there. The average analyst has a 12-month price target of 134. So Jack, you might want to maybe write some calls against it, and you can sell some puts if you have an appetite to pick it up a little bit lower.
Okay. And next up, we're heading to Montebello, Quebec, and Jack.
Oh.
Yes, thank you for taking my call. I wanted to ask about Taiwan semiconductor manufacturing. The analyst's average price target is 290. It's above that now at about 305, so I'm wondering if you think it's got some room to go. Thank you.
Good question, Jack. Taiwan Semi would be definitely in our top 10, if not our top 5 within our fund, and also in our separately managed accounts. It's pretty well at price target. It's trading right now at 305. The average analyst out there actually has a 294 12-month price target, so it's already blowing through it. We're not selling it. We're writing calls against it. But the market right now is a momentum. A lot of people compare the market today to back in the .com, and I don't believe it's just completely different metrics. However, if you remember back to the .com of 99, 2000, 2001, I was at CIBC, and during that period, that's when a lot of my dear friends on the portfolio management side got wiped out because they were trying to call the top. When the bubble finally burst, it was the retail people that actually got caught. But it was the portfolio managers in advance that were trying to call the top, and they just didn't have deep enough pockets. And that might be a comparison to then, because this is very much a momentum and a sentiment period. And you just got to watch the price action. Taiwan Semi is a great example that it doesn't have much runway left. However, they're the biggest foundry in the world that actually manufactures all these accelerators and chips and so on. So you got to stick with it.
Okay. And on that note, we're going to take a break. When we return, we'll take a look at Kim's past picks. That's up next. All right, time now for Kim Bolton's past picks. And the first one we're going to take a look at is Teradyne Semiconductors. They make semiconductors. Now they're testing products and services for that range there. How are we doing here? You recommended it at 111. It's at 142, 28% return, total return.
Yep.
28%, not too shabby.
Check that one. Teradyne. It's interesting when we did these past picks, and I always sort of like doing themes. And so last October, one of the themes, as I said, we're going into 2025, that we were going to be watching very closely was the robotics. And so Teradyne actually has a division that is dedicated to collaborative robots designed for manufacturing environments and so on. But it's interesting about the robotics side only accounts for about 11% of revenues. Their main revenues are on the testing for semiconductors, and they make about 3/4 of their money in there. It's a bit pricey. It's currently trading at about 148-ish. We have a 12-month price target of 150. We still own it, and we've been writing some calls against it. If you're interested, I wouldn't buy it here, but I think you probably will over the next 6 months be able to pick it up, around 140 to 135.
What about robotics in general in that field and that sector? How's it looking?
Phenomenal. If you ever get a chance, Roger, to do a trip to Japan, they're just light years ahead of us when it comes to the robotics, because actually two of the biggest robotics companies around in the world are Fanuc and Yaski Electric. And so it's like a lot of things. Japan is sort of the ground zero for the robotics right now. That's exactly where Elon Musk buys all his robots from for his giga factories. So we believe next year is going to be the year for the robotics. Elon Musk actually just raised, he used to say that they'd sell 25 to 30,000 humanoids in 2026, and now he's actually raised it up to 50,000. So this is outside of the manufacturing facilities. These are humanoids for you and I.
Okay. All right, let's move on to Dassault Systems.
Yep.
And let's see, how did it do it? You suggested, you recommended at 34.31 US. It's at 33.76, kind of stalled, eh?
Yeah. As we were talking before, this is just one of those companies that looks great on paper, but the price action just doesn't come through for you. So the big thing about Dassault is that, and I remember talking about Dassault 10 years ago, because what they used to do is that they could have a virtual machine on a laptop or on a desktop, and it's called a digital twin. And then they would fiddle with the machine and figure out how to actually run it more efficiently and effectively. And
through the 3D.
Through the 3D, maybe we move this, maybe, we put some cooling in here or whatever. And it makes a lot of sense. However, AI is sort of overshadowed it here. And so we backed away. We actually sold it back in just when the market popped, back the end of May, beginning of June.
Okay.
Yeah.
All right, let's get the last one in. Hyundai Motor Company. It's in a bit of a where you bought, what you bought is not quite what we're talking about right now.
Right. So you're being kind there, actually, on the total return. So we actually recommended it back on October 23rd of 2024. And one of the main reasons that we recommended Hyundai was, again, on the robotics side. So they bought back in 2020 Boston Dynamics, which is one of the state-of-art robotic companies. Plus, they're a great motor company. And the reason they bought Boston Dynamics was actually they wanted to be able to build their own robots for their assembly lines. It sort of flew under the radar, and the volumes were low on the London Exchange, and also where the GDR was, and then also the ADR down the States. And so back in December 19th of 2024, they delisted. So, and it's a little complicated if you still own it. What you got for every two of the GDRs or the ADRs, you would get one of the Korean Kospi Hyundai shares. But then you have the whole foreign exchange side that goes in with the Korean won. So we actually worked it out. If you still own it, The total return over the course, including dividends, was minus 7%. And so that's why I said you're generous and giving me 2%. But anyway, it's a fantastic company. It's just difficult to actually buy into it because it's only on the Kospi now. And then you end up having the foreign exchange of the Korean won, which is
always a difficult one. Okay, we're going to take another break, but we'll be back with Kim Bolton of Black Swan Dexteritas taking your questions on technology stocks. Okay, lots of people wanting to talk to Kim, and let's get right to the phones. Brian from Toronto, what's your question for Kim?
Yeah, hey there, Kim. This is Bay Street Brian calling. I just wanted to ask you about quantum emotion, ticker QNC, and the NR today that came out about the world's first quantum secured hot wallet. And just wanted to know your thoughts and opinion on the company. Thanks. I'll hang up and listen.
All right. Thank you, Brian.
Thanks, Brian. I actually met the CEO, Francis Bolito. It would have been sort of last spring, I guess. And they're actually out of Montreal, have a very strong connection with the Sherbrooke University. And Brian, you're absolutely right. They just announced this morning, I think it's up like 20% today. They announced the launch of the world's first quantum safe hot wallet. When I mentioned it this morning on our research call, everyone was a bit frantic because they didn't think it was possible, but apparently it's going to be launched in the public market, and it's going to be available on Apple and Android and tablet come November 1st. So we're checking it out too. You know, it's a big deal for quantum emotion because they've been losing money, like a lot of these, and this is going to be a big revenue generator. And their quantum, Brian, their quantum safe cold wallet is also going to be launched as well. And they also partnered with Gemma to create this multi-layered quantum security chip. So there's lots going on. Brian, we don't own quantum emotion. The ones that we own in the space are ionic, D-Wave, and quantum computing, and a small bit of Rigetti.
Okay. Yeah. All right, let's get back to the phones. And Walter from Lindsay, Ontario.
Hey, Kim, how are you today?
Good.
My question is on Monday.com. It's lost about 50% of its value. I have a very small position in it. My question is it worthwhile keeping, or should I move on? Look forward to your response. Thank you.
So, great question, because, Monday together with, the likes of Salesforce and Adobe all got caught up in this movement in the market that AI was going to eat the lunch of a lot of these software type firms. So we sold the Monday.com. Just, it's the software side is not the place in the AI revolution. It's the hardware side. But, the pendulum will swing. If you have a small position, maybe, in this environment, people are always looking for tax losses. So this might be a good candidate.
The way to look at it right now.
There's always a silver lining, I guess.
Any idea how long we might be looking at it as a tax loss? It's all hardware right now, isn't it?
Yeah. And I would imagine that hardware pendulum is still going to stay on the hardware side, certainly going through 2026. So you might be looking a couple of years down the road.
Okay. Let's get to another call here. And Mike from Toronto. Mike.
Good. Thanks for taking my call. And my question is concerning Marvell Technologies. I acquired a nice position in early September. I'm up over 30%, and I would like your input on whether I should hold or start getting rid of some of those shares. Thank you.
Well, good for you. I'm glad that you bought it. So, Roger, Marvell, what they've really sort of carved out in the hardware side of the AI revolution is they've really sort of cornered the market on what's called trading on the edge, so edge computing. So normally you'll have the data centers and stuff will have to go back and forth from devices to the data center and back. With innovation, they've actually been able to build some of these chips to actually put them in the devices, and so that's what's called the edge computing. Marvell was very early on this, and they've got a bit of an edge. It probably won't last forever, and it's pretty nicely. Our 12-month price target is up at 102. The average analyst out there actually has a 12-month price target of 88.5, so it's almost fully priced for most. However, we still think, that it has a good runway going certainly into 2026, maybe into 2027 before someone can actually catch up to them on the edge computing.
Okay. On that note, we're going to take a bit of a break, and we will be back with Kim Bolton of Black Swan Dexteritas taking your questions on technology stocks. We're back now with Kim Bolton taking your calls, and first up is John from Toronto with, do we call it an old school question, I guess? John, what's your question?
I have a question about Apple.
Okay, is that any particular part of it?
Like anything. What products? Like they get new stuff like every year, like new iPhones every year. What's the difference by new iPhones and every single year? What is the difference by them getting new iPhones every single year?
Okay. Sort of get a sense of it. Thanks for the question, John. We're just mentioning that always used to talk about Apple, and now people don't.
It's lost in the rush.
However, I think it was just a few months ago, we recommended it. I don't know, it was around 205, 210, and here we are sitting up at almost 260. I would say at this point, it's pretty fully priced. However, I think it's taken a lot of people by surprise because the iPhone 17 that just came out seems to have a heck of a lot of traction. Not quite sure whether it's the new, like they have their own chip now, and the M1, and then they have a new power frequency in it, new camera. So there's a lot of new things in it, but I also think that what's going on is that it's sort of in a cycle now. So, people who had 12, 13, 14 iPhones are now upgrading into the new 17. John, if you own it, because it's fully priced, I'd recommend maybe writing pretty short dated 1 or 2 week call, maybe use the strike price up at around, 265 or 270, because I don't think there's that much of a runway, but you can make a bit of income right in the calls against it.
Okay. We're going to get to Bowmanville, Ontario, and Bill is calling from there. Bill, what's your question?
Thank you for taking my call. I'm calling about a Canadian company that's been in the news a lot lately, Constellation Software. Do you like it? Would you buy it? Any information you have would be appreciated. Thank you.
All right.
Thanks, Bill. Interesting stock over the last couple of weeks, and I certainly hope that Mark Leonard, the founder and CEO and president, he's just sort of stepping down. He's still part of the board, for health reasons. But God bless. I hope he's everything works out for him. A lot of people sort of compare Mark Leonard to that of like Warren Buffett with Berkshire. So when Warren Buffett stepped aside, everyone sort of put a pause on Berkshire to see how,
what would happen?
The new regime, right? And I think that's what's happening right now. Mark Leonard, he built up a fantastic company, but he always said that it's so important to have smarter people than he around him, and those smarter people than
Smart
he
leader.
are still there.
Yep.
So I would recommend to viewers that you buy it. We bought some. I think it's trading around, 3,800 Canadian?
Yeah, 38.95 is what I have right now.
If you look on the charts, it definitely has some support down at sort of that 3,500. If it goes under 3,500, something's going on. So I would, I'd definitely buy it here.
Okay. All right, let's get on one more caller. And Gulam from Toronto, what's your question?
Oh, hi, good afternoon to you both. I hold ZQQ and SOXX. Done okay on it. I'm just wondering, I should still keep holding it for more upside, or is it time to sell? Appreciate your opinion. Thank you.
Okay.
Thanks, Gulam. It's an interesting question. Because here we are sort of at the top of the market. So I'd even recommend, I'm not quite sure, I'm sure they have call options on this. I'm just not a big fan, certainly, of hedged products, like them doing their own hedge, let alone being in an ETF, because it's just another way for them to actually make some money. When you could actually do it yourself, you can do your own hedging, and you can actually build sort of the winners out of the triple Qs. So, but if you own it, I'd once again maybe write some short-dated calls against it. Yep.
Okay. And are there any others in that field you look at, or you just essentially like to stay away from it?
Well, it's playing in sort of the NASDAQ, and in the NASDAQ, it's not as though the tide is lifting all boats, right? And so you got to be picky. And you certainly have to be picky when the market's trading at these lofty levels.
Okay. On that note, that's it for our calls for today, but don't go away. And we'll be sharing his top picks. That is coming up next. Join us tomorrow on Market Call when Stan Wong will be on the show. He is the portfolio manager at Scotia Wealth Management, and we'll be taking your questions on North American large caps and ETFs. And if you missed Market Call, check out our daily podcast. You can find it on iHeartRadio and other platforms. You can also watch full episodes on our YouTube channel. All right, time now for Kim Bolton's top picks. And first up, we're going to take a look at Vertiv out of New York.
Yep. Thanks, Roger. So the three top picks are all sort of within a theme of, we were just talking about the connectivity in the data centers. Not just the connectivity, like a Datadog or even like a Mundi, but even when it comes to accessing power and these GPUs that you have in the data centers, you get so many, and it just runs really hot, and so there's a lot of cooling that you need involved in that. And so actually it is Vertiv who's sort of the leader when it comes to air and liquid cooling. And so they have partnered with all the big firms, the Digital Realty, the Equinix, Nebius that we talked about before. And, you know, it's like what we were talking in the break. It is those picks and shovels. It's not the sexy stuff, right?
Yeah.
And Oracle yesterday, everyone was complaining that their margins were down and so on because they have these GPUs that are not running. And one of the reasons for it is because they don't have sufficient power and cooling and connectivity and everything. And these are the stocks that have it. So anyway, Vertiv currently trading around 163. We have a 12-month price target of 198. So it still has a nice runway left. You know, I'd buy a third here. Maybe another third down around 155 and another third around 145.
It is really timing for some of these because I was looking at the low was in April at 53.
Yeah.
So it's, so you really, you got to have a little bit of a stomach, don't you, with some of this?
Well, I know, but, you know, back in April, the sky was falling.
Yeah. Fair point. Okay, let's move on to Oklo is your next pick. And it's advanced fission. This is kind of cool. This nuclear, essentially.
Exactly.
Portable nuclear.
Portable nuclear. It's like, so it's all about getting sufficient power and whether you can get on the grid. And if you can't get on the grid, this is, and get enough power, not just the power, but also power the cooling side of things. And so there are two big players out there. Mind you, they're not profitable yet, which creates a lot of volatility. But Oklo and NewScale, the symbol on that is SMR. So Oklo, we own both of them, really like Oklo. So basically they have portable nuclear reactor portables that you hook up to the back of the data centers. Makes so much sense. And so they're frantically building out. Not surprisingly, NVIDIA has given them many billions of dollars to help them build it out because, you know, they got the GPUs, they want to sell it to the data centers need the power. Hey, we'll help you out. We have this company, Oklo. And so we have a 12-month price target of 165. So you could buy some here right around 139. I'd add to it down around 132 and then maybe down around 124.
And something like that, I mean, if this works, you start scaling it to cities.
Yeah,
and
absolutely.
other facilities and things like that. There's all kinds of room to grow on this if it works. But hopefully.
It works because, you know, nuclear fission has been around for ages, right? It's the end users that you got to worry about. That's the risk.
Yeah.
I don't think the risk is all that high, but if more people start reporting that they have sort of GPUs sitting in data centers and they're not connected and they're just idle and it's costing them billions of dollars to do that, that could be a problem.
Okay, and your last pick is Arista Networks out of New York.
This has been a favorite of ours for a while. We haven't recommended it this year at all, so I wanted to get it in. Arista actually started about 12 years ago, just around when we started at Black Swan Dexteritas, and it was a handful of fellows from Cisco that spun off, and they didn't have any sort of legacy luggage behind them like Cisco does, and they started up Arista, and basically they supply the same sort of thing as Cisco, routers and switches and Ethernet, and they've just become very much a darling around, especially in the AI-driven networking side, providing the high bandwidth and so on, low latency infrastructure. So you could buy it here, just around that 150 level. I'd add to it down at around 142, and then likewise down around 133.
And is this almost like, can you call this an old school company relative to this field?
Well,
is that a good or bad thing?
Well, it's not. It's only 12 years old.
Yeah.
But the product is sort of old school. But you do have to take the old school product and bring it into the new world needs of AI-driven infrastructure and bandwidth and but this is what these guys are the best at. It's interesting, like even in that sort of connectivity space, you know, you got Cisco, you got Arista, but look at some of the other ones that have done fabulously well. Dell.
Okay.
Right? Dell.
I'm going to have to wrap you up there, though. We're almost out of
has
time. But Dell is,
exploded.
we'll end it on Dell. It's done fabulously well. It rhymes.
Thanks,
All right,
Roger.
Kim, thank you very much for joining us. Kim Bolton is the president and portfolio manager at Black Swan Dexteritas. Thanks again for joining us, and thank you for watching Market Call. We'll see you tomorrow.